a bit about the US inflation update. Now, the US Consumer Price Index year-on-year came in at 3.2% in July versus 3.0% in June. Now, when it comes to the new month, we're actually getting data from the previous month. So the data that was released on August the 10th is actually representing the data that came in July. Okay. Now, when we next we look into the Core Consumer Price Index year-on-year. Now, among all between the US Consumer Price Index year-on-year and the Core Consumer Price Index would be the one that the Fed is actually looking at and studying in detail. Now, every time you hear that the Fed wants inflation to come down to 2%, they are referring to this core consumer most of the time. Okay. So if you can see here, Core Consumer Price Index year-on-year came in at 4.7% in July versus 4.8% in June, a decrease of 0.1%. Whereas the month-to-month Core Consumer Price Index remained the same as previous month at 0.2%. Now, like I mentioned earlier, the Fed is looking at the Core Consumer Price Index. Now, if you're talking about the target at 2%, that is still a 2.7% away from its target. So it's not really near as people think it is. So by it dropping like that, and we said, and you start celebrating, you still need to think it's still far. Okay, but there is one thing. Now, the Fed has also announced that they are giving it time for the inflation to drop. Previously, we had reports that they were looking for the inflation to come down to 2% in 2024. But they have since changed that idea, knowing that it's not that easy for inflation to come down to this kind of levels that they are looking at. So hence they have more or less extend and change that period in further up into 2024. Now, a glance at the Fed rate probability shows that the Fed is still expected to remain its interest rate at 5.5 because the probability of that is at 90%. Now, before this, they were thinking we had reports that Jay Powell has mentioned that in 2023, they want to increase interest rate 2 times. At least they're looking at another two times from now to the end of the year. They want to do another 2 times. Now, the next one, the market is seeing that for the coming one, which is in September, probably they're not going to follow through with it. Okay, so this is what the market is thinking. But what about the rest? So we really need to look into all these prices, unless we are getting something, especially the Core Consumer Price Index, they start to move up once again, then I think it will prompt Jay Powell and the rest to really, hike it one more time, because hiking rates, of course, it's just easy. You just announce that, but it does not come without the effect on the entire market. And, hiking rates further can severely dent the progress of the US recovery. Okay, US is seen as recovering at the moment because you have a very strong jobs market. But if you continue to hike the rates, right, I believe even that would be threatened. And we have started seeing it, although I would still consider it strong with jobs, non-farm payroll data coming in at above 180, but based on the previous revisions, right, they're slowly changing it. I mean, the next non-farm data, you can also revise it, maybe it'd be less than the 180K, right? So, but we are seeing the probable beginning of these cracks there. And I believe that if the Fed continue to raise their interest rates, that could actually make matters worse. Okay. Now, the Core Consumer Price Index, like I said, mentioned earlier, dropping by 0.1 may not be seen as enough. because it's actually dropping a bit too slow. We were hoping at least a 0.2 to 0.3, then that will help. Because one thing that we need to really look into, because oil price has started to rise again, and it has risen roughly $13 since we last talked about it. Currently, oil is about $82.6 already, and since the beginning of July that we are talking about $13 rise there. Now, like it or not, oil price do affect inflation, and whether core strips away the part of food inflation or energy inflation. But if you look into it, you can't run from the fact that whenever oil price increase, energy prices, right, they do affect somehow in a way in the other areas that will affect the core. Although if you have stripped it out already, but I still see that there is that probability of that happening. Now, if oil price continue to rise due to the actions of OPEC plus and whatnot and other external factors, right, I think that the moment if you see core consumer price index year on year start rising again, Powell and his team would not hesitate to increase their rate one last time for the year of 2023. That could actually happen. So for us to look into it, I've already created this chart right now. Like I said, again, this is a very crude way of doing it. We need to review it once again when this is done. So what we have so far with the latest CPI news coming out, right? So this one, the latest one is a hike from here because the CPI has increased by 0.2%. But if you're talking about a core, that has decreased, there's no hike, right? But like I said, we need to at least have the PCE come in. Then we can compare the PCE together with the August core CPI year-on-year data. So if both are coming in lower than expected, then yeah, probably that the Fed won't be hiking its interest rates in September. Come September, they might not do it, especially if this over here comes in at neutral. This area, the September data comes in neutral. But if there is a change right over here, and just before the FOMC, one more, the core CPI coming in much higher due to the rising oil price. Here oil price, rising oil price, and then that in a way affect, or although it can be minor effect here too, then yeah, probably that they might continue to hike its rate again. Okay, right, so let me know your thoughts, right? Will there be a hike or no hike right over here? But just remember one thing: if they hike rates, the US market would see a big movement down. It's already started moving down already, but that correction could, I still think that the US stock market is correcting, but that scale of correction can be a big one if the Fed ever mentioned that they want to hike rates, continue to hike rates once again. Okay,